Everyone assumes the AI boom is entirely about shiny new GPUs, but the most surprising star of this cycle is actually a spinning magnetic hard drive. Welcome to Earnings Unscripted. It's Tuesday, July 28, 2026, and we're unpacking Seagate's fiscal fourth quarter, ticker STX. Honestly, Miro, these results are kind of wild.
They really are. They just posted their 13th consecutive gross margin expansion. That's basically unheard of for a hardware manufacturer.
And revenue came in around $3.6 billion, up 48% year over year, which obviously the data center demand is pulling a lot of weight there.
It's all about profitability right now. Adjusted earnings hit $5.71 a share, comfortably beating their previous run rate. You just don't expect this much pricing leverage from traditional storage arrays.
So how'd the market process that? I know the stock's been on absolute tear leading up to today.
The tape was highly volatile. They rode an 80% rally across the quarter, so expectations were absolutely sky high heading into the bell. The stock gapped down in regular hours, spiked hard right after the print dropped, but ultimately settled slightly negative against yesterday's close. And since we're tracking this crazy price action, just keep in mind our reads on the tape are purely personal perspective, definitely not formal financial advice.
Fair enough. I'm just still stuck on why this demand is happening in the first place. These cloud providers are spending billions on supercomputing. How does a legacy hard drive fit into an advanced AI workflow?
Well, the narrative's completely shifting. Dave Mosley pointed out that as we move towards agentic AI, those agents aren't just spitting out a single answer anymore. They're running continuous logic loops and maintaining massive amounts of context, which generates this huge pile of unstructured data called a KV cache.
So wait, KV cache? So it acts like what? A giant short-term memory bank for the AI?
Exactly. And you can't leave all that contextual memory sitting on expensive NVIDIA GPUs or fast flash memory because it eats up your processing capacity. So they dump it onto Seagate's tiered mass capacity drives to free up the compute cycle. It makes legacy hard drives a direct beneficiary of AI inference.
Okay, that's fascinating. They're basically acting like the world's biggest, cheapest filing cabinet so the AI doesn't burn itself out.
Right, which means Seagate's entire exabyte output is getting gobbled up at premium pricing.
But here's the paradox I can't figure out. If demand is that desperate and margins are breaking records, why did management say their actual physical unit production is totally flat?
Because they figured out that chasing pure volume is a sucker's game. They're obsessively focused on what they call areal density instead. Dave Mosley essentially told analysts, and I'm quoting here, "We're not really increasing the box count. The big story is the process content, the manufacturing complexity as we move from 3 terabytes to 4 terabytes to 5 terabytes.
Okay, hold on. Walk me through that. Are they literally pausing their assembly lines just to make the exact same physical drive hold slightly more data?
Basically, yes. They're rolling out their new heat-assisted magnetic recording technology, which everyone just calls HAMR. It requires extensively retooling the factories, so the platters spend significantly more time inside the machines. They're actively trading volume for density.
That seems entirely backwards to me. If your customers are begging for storage, wouldn't you just spin up another factory?
You could, but new factories absolutely destroy your free cash flow. This strategy gives them a massive profitability boost by cramming more capacity into the same footprint without blowing up their budget. Their capital expenditures are targeted between 4 and 6% of revenue, and that's incredibly disciplined for a hardware cycle.
Right, and that discipline just bleeds straight into cash generation. I mean, they pulled in about $1.1 billion in free cash flow this quarter alone, right?
Exactly. Plus, this factory transition creates a natural bottleneck. By keeping supply intentionally tight, they get immense pricing leverage. The CFO said it outright. The gap between supply and demand is now a little bit bigger than a few quarters ago. Our volume was a little bit higher in fiscal Q4. We are pricing that increased output at a very good price right now.
So that's the real magic trick behind those record margins we mentioned earlier. They're starving the market just enough to hike the premiums?
Mostly, yeah. But there's a slight catch in their guidance that some analysts zeroed in on.
Oh, you know I love a catch.
So they expect operating margins to hit roughly 50% in the upcoming quarter.
Huge number. But someone on the call pointed out that one of their initial launch customers for the new drives just had a highly favorable pricing contract expire.
So a chunky discount rolled off exactly when they needed the boost.
Exactly. Part of that eye-popping margin bump is purely mechanical. Management downplayed it, naturally, pointing right back to tight supply. But you can't ignore a massive long-term agreement sunsetting at the perfect time.
Still, even with a favorable roll-off, they must be seeing incredible forward demand if they're acting this confident about pricing. Are they getting this all from the usual cloud giants?
That's the other wild wrinkle here. They're tracking a massive demand surge from what they call Neoclouds.
Wait, Neoclouds? I'm picturing like a cyberpunk server farm in a basement. What exactly is that?
Close. It's basically specialized infrastructure providers who want to host custom AI instances on-premise, very close to the end user. They don't want to rent space from the legacy hyperscalers, but they still need to warehouse absolutely massive amounts of data. And they're building this out for physical AI, too.
Okay, pause. Physical AI? Like humanoid robots? Because that's what the entire internet seems obsessed with right now.
Yeah, exactly. But while consumers look at the robots, Seagate just looks at the data exhaust. Mosley pointed out that physical AI generates billions of hours of unstructured video and sensor data continuously flooding back to the server. You can't process all of that instantly, so it has to live somewhere cheap.
Oh, wow. So all those factory cameras and warehouse sensors are basically just feeding the hard drive market. That completely broadens their customer base. They aren't reliant on just 3 tech giants anymore.
Right. And management claims that thanks to all this compounding demand, the vast majority of their nearline capacity is already fully allocated into calendar 2028 through supply agreements.
Which sounds amazing on paper, but if their factories are running flat and all their future inventory is basically spoken for, what happens if this macro cycle turns and those Neoclouds suddenly try to back out of those allocations?
That's the core risk. If capital dries up and those localized players cancel their orders, Seagate's completely exposed. They traded all their volume flexibility for profit margin.
Right. The vulnerability's literally baked into the strategy. But honestly, management doesn't sound like they're losing any sleep over it.
No, they really aren't. They just reaffirmed the whole structural demand story, guiding next quarter's revenue to around $4.1 billion. And they're expecting adjusted earnings at the midpoint of roughly $7.30.
That's a massive sequential leap. So essentially, as long as these AI agents keep hoarding contextual memory, the storage supercycle just keeps plowing ahead?
That's the baseline assumption, yeah. They believe the sheer volume of unstructured data from physical AI basically guarantees the demand side. So next quarter, you aren't really watching sales demand, you're just watching the factory execution.
Yep, whether the physics can actually deliver. I love it. Who knew the most interesting play in AI this season would be a legacy storage company intentionally starving its own assembly line?
It's just entropy with better marketing.
Exactly. All right. I think we've pulled enough threads for today. Thanks for joining us to look under the hood of the AI data boom.
Always a pleasure. See you next time.
If you enjoy having earnings decoded without the corporate jargon, maybe go ahead and tap follow on your app. We also want to be totally transparent that this entire podcast, including our voices, is completely synthetic. It's an AI project that ingested all those complex manufacturing details from Seagate's latest release and pushed this story to your feed the very same day. Tell us what you think or send your ticker requests directly to earningsunscripted@datamadness.ca or find our X link in the show notes.
We'll see you next time.